What if you can invest in the crypto without risking any of your own cash? Smart investors are using a strategy, the same strategies that the banks use to grow their money, protect their assets, and also invest in opportunities. In this video, I'm going to show you exactly how. All right, here we go. Here's the backstory. I recently had a client come to me and it's like, man, I really want to invest in the crypto market. He invested in the crypto market before. He's made some money. So he's very pro cryptocurrency and wanted to invest a large sum of money into the market. So my conversation with him as his financial strategist was, hey, man, I like cryptocurrency as well, but it's a very volatile asset class. You can make a lot of money and you can lose it all. So let's do this in such a way that we can still protect your principal, but allow you the opportunity to make some money. He said, okay, Perry, let's do it. Because here's the problem. In the traditional way of investing, if you want to invest, you either have to use cash or credit. And both of those have downsides, right? If you invest, let's say you want to invest 10,000 into the cryptocurrency market and you took that money out of your, say, savings account, right? Well, that money is no longer earning interest. Or if you took that out of your other investment account, out of your stock account, that money is no longer have the opportunity to grow. So you have that risk of that you're tying up your capital and you're kind of going all in on the cryptocurrency or a different asset class. But what if there was a smarter way to do this where you weren't jeopardizing, running the risk of potentially jeopardizing your financial future? Well, there is. How we structure and help my client invest a large sum of money. I'm talking about six figures into the cryptocurrency market without risking his own principal was using a strategy called infinite banking. And I know you've heard of it. A lot of people have heard the concept of be your own bank, bank on yourself, the Rockefeller method, what have you. But with this strategy, and when I say infinite banking, what I'm talking about is a properly structured, optimally funded whole life policy with a mutual company that pays a dividend. Okay. So let me say that again. A properly structured, optimally funded cash value whole life policy with a mutual company that pays a dividend. If this policy or this system is structured the proper way, you will have access to cash value immediately. Okay. So this is how it works. You build cash value inside the policy. You use the cash value that you're building inside that policy to be able to borrow against it. So you're not taking the money out. The money is staying inside the policy, growing uninterrupted. Then from there, okay, you use those borrowed funds to now invest into cash flowing assets or high upside assets like cryptocurrency. So the question would be like, well, Perry, why would I take out a loan? Don't I have, a loan payment or something along those lines? The answer is no. A properly structured policy, right? If using the infinite banking methodology, you have what you call a non-structured loan. Well, Perry, what is a non-structured loan? A non-structured loan is a loan that you do not have a required monthly payment. So you're not required to pay it back. Matter of fact, if you never paid it back, what would happen at the end is the loan money that you borrowed out plus the interest would just be deducted from your death benefit. But we're not going to do that. We're going to end up paying the loan back, but you're not required to pay it back, which means you have time to see how your investment pans out. Okay, back to the investment. So this is the step-by-step process to do it. Step one, fund your infinite banking policy with premiums that are going to build cash value and earn interest and grow uninterrupted. Step two, take out a policy loan instead of using your own cash. So your money is still sitting inside the policy, growing uninterrupted, while you now took that policy loan, OPM, other people's money, and invested in the crypto market. Step three, invest in crypto while your policy cash values continue to compound. Okay. Step four, pay back the loan strategically with your profits or from other cash flow. And why is this so powerful? because you're making money in your left hand and your right hand pocket. You're growing two assets at the same time. Your policy is continuing to grow uninterrupted, and you have the opportunity to grow your nest egg investing in the crypto. Whew. Okay. Now, everything has its pros and cons. So let me kind of share with you the pros to this strategy. Pro number one, keeps your capital working in multiple places. Have you heard the idea of using $1 multiple times? Well, this is one of them. Two, offers liquidity. You can access your funds at any time. So that's powerful in that sense. Three, provides a hedge against market volatility. How much better would you sleep at night knowing that you're invested in the crypto market or the stock market? And if that particular strategy goes sideways or goes down or you lose money, that you still have your principal growing uninterrupted without having any other financial obligation other than to pay back the policy loan at your leisure. Whew. And pro number four, the policy itself has guaranteed growth and tax advantages. So your principal stays inside the policy, growing tax deferred. But there's always, I always keep it 100 with my audience. What is the downside? Well, here's the downside. Number one, this strategy requires discipline. Policy loans should be paid back to keep your system running because, again, you're using the infinite banking system. So you put the money in, you should pay that loan back, and then you should continue to put money inside that policy. That way you continue to grow your bank and keep it vibrant. Con number two, if you're not putting money in a form of a lump sum, it may take you some time to build up the cash value. You might not be able to run this play right now. But if you do have money that you can put in lump sum, this may be a really good play for you to get access to capital in less than 30 days. One of the carriers that we use, we have put money in on a Monday and had access to capital by Wednesday. Not all policies are set up that way. Not all carriers have that quick of a turnaround, but with the carriers that we use for our clients, funds are available usually within 72 hours. Okay. Third con here, let's call it what it is. The crypto market is highly volatile. You can make a great return, but you can also lose some money, right? So those are the pros and the cons. And here's the deal, family. This is how the wealthy continue to grow and protect their money at the same time. Hey, if you want to learn how to do this step-by-step process, I actually teach this inside our Financial Freedom Bootcamp. There's a link to learn more about the bootcamp in the comments. Make sure you go check it out. Secure your spot for the next bootcamp so you can learn more strategies like this as we teach you how to think like the bank and make money in multiple places at the same time off the same dollar. All right, y'all. If this was valuable, make sure you do all the things on YouTube. Make sure you subscribe. Make sure you share. Leave a comment. Happy to connect with you. All right. See you in the next videos, y'all. Peace.